Thank you everyone for joining us for today's webinar. I'm Sebastien Cross. I'm one of the co-founders at BeZero Carbon and Chief Innovation Officer. And I'm joined by my two fantastic colleagues to discuss Article 6 and some of the key developments heading into COP28 next week. I've got Teresa Hartmann with me, who's our Chief Ratings Officer, and Finn O'Maherty. I'm sure I always mispronounce his second name, but I give it a shot nonetheless. Who's our Head of Policy. And the three of us make up the team of four that are also heading out to COP. We will be there from the 2nd until the 10th. So please do reach out if you're going to be there and want to meet on the ground. But for now, I'm going to hand over to Finn initially to run through some slides that we've got, and then we're going to open it up into more of a Q&A. Please do pose questions on the chat. We'll be monitoring those and feeding them into the discussion later. But Finn, I'll hand over to you.
Thanks very much, Seb, and good job at pronouncing my name's almost correct. So I'm Finn O'Maherty, the Director of Policy Markets here at BeZero. And there's quite a wide group of people on this call. So we're going to start at a high level and give an overview of Article 6 and how we view it as part of the climate transition. And then we will go into a little bit more detail talking about some of the debates that are happening currently among negotiators and other stakeholders in the market. And finally, we will pull out some of the examples of individual countries. We will go through this pretty quickly, but very happy to take questions again on some of the detail at the end. So the aims of the Paris Agreement are very straightforward. It is a long and detailed agreement, but it really boils down to a number of key issues. First is the globe is aiming towards the target, and that is specifically to limit warming by 2 degrees, or specifically below 2 degrees. What that means for individual countries is another target, in this case, reaching net zero by mid-centuries, and some countries have defined that slightly differently. And finally, the third pillar is about finance, climate finance, making sure we have sufficient money to achieve these goals. There are also some goals around adaptation, and the worse we perform at mitigation, the more we're going to have left to do on adaptation. That leads into other challenging issues around loss and damage and other factors. But for us, these are really the key things that Paris is aiming at. The agenda at COP is similar to other agendas. This year, there's a specific focus on the global stocktake, assessing the progress of all nations towards meeting these targets. And the short verdict, unfortunately, is that we're clearly off target. The second issue that's going to come up and be a huge feature of this COP is climate targets. And again, it's not a good news story here. We're missing our climate targets. And really what we wanted to present today was to position Article 6 as a solution to this issue. Each country has decarbonization targets. That's a feature of the Paris Agreement. And Article 6 allows them to trade their balance. There's been some research as to how this could accelerate transition towards net zero for the globe. And in short, it can double emissions mitigation globally. So it has potential for an enormous effect. But we really wanted to break down exactly how Article 6 and emissions trading actually helps us reach the goals of the Paris Agreement. And in short, it's about enabling higher ambition, both in terms of the developed countries who are trying to reduce emissions, but face practical and financial barriers to doing so, particularly from specific stakeholder groups. By allowing them to fund decarbonization elsewhere, this helps remove some of the barriers to those countries having higher ambition. But of course, if we are to reach our target, more than 2/3 of global abatement actually has to happen in the developing world. So by providing a mechanism to finance those emissions reductions. This can bring forward climate action that wouldn't otherwise happen, or that wouldn't happen for many years. So how does it work? We're actually going to start with Article 6.4, which is the ambition to set a formal marketplace. And this resembles many other marketplaces. It has a supervisor or supervisory authority. In this case, it would be the UN. They set rules. Some of those are very technical and focus on specific methodologies, credit types. There's various measures in there to improve credit quality. That's a topic we might come on to later. But crucially, countries themselves must authorize any credits that are sold in this market. So the country has the last say as to whether a credit from their jurisdiction goes onto the market. And that's an important feature of how this market is designed. In terms of the buy side, other countries can purchase the credits, but it can also be companies or even individuals. One of the main challenges around Article 6.4 was it was agreed in Glasgow 2 years ago, and the aim was to have it operating by now, but it's taking a lot of time. And some of that is due to the nature of multilateral negotiations, where you have 190 countries trying to agree on detailed rules. Others are due to fundamental disagreements between the parties. But what this means in practice is we don't think the market is likely to be operational before 2025, and it could well be a bit later than that. Then there is the part of Article 6, which is referred to as 6.2. And we go on to this second for a specific reason. First, it doesn't really resemble a traditional multi-party market as we understand it. Instead, it's more of a bilateral agreement, so a direct agreement between two parties, in this case, two countries. Article 6 allows for that. And the two advantages to it are really, first of all, speed. It means that this market can establish itself quickly without waiting for detailed rules to be agreed, but also sovereignty. It's clear that some countries are reluctant to submit to a UN or any other body setting it rules at the international stage. And that's just a feature of international relations generally. The issue with this market is that it's based on a few loose principles, so only a small amount of text to read as part of the Paris Agreement. The detailed rules, how the market actually works, that's set by the countries themselves. So this means there are a number of challenges with the market, even though it is scaling more rapidly. There may not be much of an incentive for stringent standards. We are seeing it in some countries, but it's self-imposed. There's no requirement to do it. And there's very little oversight of it. One of the reasons that makes it difficult to have oversight is there's actually provisions in Article 6 which allow for information to be withheld. So countries can actually keep certain information confidential as part of this. As well as that, because there's no detailed rule book, there's no real restrictions on credits. So there could be a wide range of credits within this market mechanism. All right, so we'll touch on a few of the specific debates that are emerging now. There are others, and again, very happy to pick them up as questions at the end of the session. So there's some overlap between these debates, but I'd like to focus on the ones that refer to Article 6.2 specifically first. As I mentioned, confidentiality is a key thing that emerged from COP 27 last year in Egypt. It allows countries to withhold information from the market that are part of those bilateral transactions. For us, we believe information is essential to any market mechanism and essential to help scale Article 6 generally. So we really think that this issue needs to be discussed and reopened, and many countries are still debating it. And specifically, narrowing the definition of where confidentiality can be used. And we believe that would help build trust in the projects traded over time. The second debate is around eligible credits. Due to the wide and loose definition of Article 6, there is a wide range of credits that are eligible. There's ongoing debates about avoidance, some types of avoidance credits, which were about keeping fossil fuels in the ground. Some of these are really hotly debated by different countries in the Article 6 mechanism. For us, it's important that if there is wide eligibility, and that may have to happen because it's just not possible to agree everything between so many different countries at COP. We think a market mechanism can facilitate that, but it needs to be balanced then by other measures, such as in the case of greater information disclosure, which can help to balance that. And finally, 6.2 specifically suffers from a lack of supervision, so little oversight of transactions. And while there are mechanisms at UN level where there is an expert group who will oversee some of the information, we don't believe this is sufficient for the market. And we do think that there needs to be mechanisms that reward higher quality projects. That could be ratings, and there are other measures too. The bigger point is that the market will struggle to scale and win trust without these measures. And our experience in recent years from the voluntary carbon market, but also from the clean development mechanism that preceded Article 6, is that these mechanisms are necessary. We must address the issue of supervision and quality head on. Moving on to Article 6.4 debates, the key one here is around progress. How quickly can we scale this market? And will it be quickly enough to help countries meet their 2030 targets, 2035 targets, etc.? Market design in its nature is complex and slow, but there has been progress this year from the administrative body, the supervisory body that has been set up to make recommendations to policymakers. I think the key thing for us to remember is it will never be possible to get a perfect framework at the international level. So when we think of market design, we need to build incentives into it and not expect that a UN agreement can forge a perfect market. And if we do have that very high expectation, we expect that the rules on methodologies and credits will alleviate risks around quality and other things. I think we'll never really be able to achieve such a perfect market. So it's important really to make compromises to progress. The second one is around process. There's some key questions here, which many in the private sector have, particularly on the investment side. One of the most basic ones is, who is the designated national authority? Who is it in each individual government that gets the right to authorize credits? This needs to be super clear. The onus here isn't just on the UN setting out rules, but it's also on countries themselves to set out clearly to investors who is responsible for this. In some governments, there can be 4 or 5 different departments or agencies involved, and it's simply not clear enough to help mobilize investment from the private sector. On a related point, another key question is the topic of authorization. If countries do ultimately have the say over what credits enter in the market, what is the process and what are the timelines for that process to happen? And at a greater level of detail still, what does a contract look like? What would a typical arrangement with the government be like? What is the role for the private sector? There can be different roles for sure. It's about establishing blueprints for different models that will work for different countries. And we'll go on to a few of those examples later. The third topic I'd like to cover is one that's been debated a lot recently, which is this issue of reversals. Specifically that there is ambiguity over who is liable for reversal events, for instance, that happen for nature-based projects. Really, there are a range of solutions here, and our view is that we can learn from some of the emerging solutions in the voluntary carbon market, which include insurance, issues such as staggered payments, and there are other measures as well, such as reforms to buffer pools and other things. But that might be a topic we could bring up later. And finally, there's an important issue which relates to national sovereignty, really, for countries, this topic of revocation, the right of countries to revoke credits at a later date after authorizing them. And for us, this is a very important issue when we're thinking about how to mobilize private investment. As with other international treaties, there can be cases where assets are seen as nationally strategic, and we do think it's right that government are increasingly viewing carbon as a national asset. But it must be the case that revocation rights are clearly defined and perhaps narrowly defined. But however they are defined, that needs to be proportionate to the investment that the country seeks to attract in carbon credit projects. So finally, we will go over some country overviews. And I think the key principle to note here is that countries adopt different approaches to Article 6. There is no single model for how it works, particularly when we think of Article 6.2 and bilateral arrangements to trade credits. Drawing on some examples from the buy side, we have Singapore and Switzerland. So Singapore has agreed a number of MOUs leveraging Article 6 with different countries. And their model is really about indirect purchasing of credits that is funded by private sector participation. Specifically, they have linked it to their carbon tax. So a tax that's levied on carbon for certain industries and ratchets up over the coming years. And as compliance to that tax, companies within Singapore are allowed to purchase Article 6 credits instead of paying the tax. So it's a way for Singapore to enable itself to meet its challenging nationally determined commitments, its national targets, but also a way for companies within Singapore to comply at a potentially lower cost way. Switzerland is a slightly different model. And they also have MOUs with about 15 different countries to purchase Article 6.2 credits. Their purchasing model is different. It is also indirectly funded by private sector, in this case through a fuel import levy. But they themselves have actually defined the scope of eligible credits narrowly. And for instance, they exclude nature-based projects from what they're looking at. We've also have information, interestingly, on the price. So today we understand that they're paying an average of $23.50, which is an interesting benchmark for ITMOs, and we'll be monitoring closely how that develops over the coming years. On the supply side, or for host countries, there's a number of examples we can draw from. We've picked 3 here. India has set out a broad policy for how it intends to engage with Article 6. We're not aware of any pilot activities that it has actually signed, but it has explicitly set out a green list of projects that are eligible to receive ITMOs. And those are in some of the harder to abate sectors or higher cost, more innovative technologies, such as green hydrogen and solar thermal and some other technologies. I think the interesting thing about India is that they're very clear that they still envisage an active role for the VCM and see it as a way to attract foreign direct investment into many sectors of the economy, such as in renewable energy and other nature-based projects. Kenya is in the midst of developing an extensive domestic legislation to support its NDC, and carbon credits are a clear part of that. They intend to use Article 6 actively to raise finance and to increase ambition in Article 6. And we're just waiting for further detail to emerge there. Some of the issues you may have heard in that context relate to benefit sharing and some of the rules they have proposed to ensure that there is adequate benefit sharing among projects in the VCM, but we would expect this to apply to credits that ultimately end up in Article 6 as well. And finally, we have another example, yet another example of Ghana, who are quite advanced in some of the MOUs that they have signed. Again, they are tying their approach to Article 6 to their overall national emissions reductions targets. And we expect to see Ghana active in some of the first credits that emerge on the market. So to conclude, we would draw out a number of points, and we can tease these out a little bit more in the Q&A if helpful. But first of all, I think it's important to view Article 6, the 2 articles we've discussed, 6.2 and 6.4, both as a market in the traditional sense, but also as a form of bilateral cooperation that can take many different forms. There is no set approach to implementing Article 6. Indeed, there's some new innovative financing approaches that are beginning to emerge, and we would expect to see continued innovation in Article 6. In fact, that's going to be an important feature if we want Article 6 to scale. A key thing from our side is that we must acknowledge that the UN framework is limited. It's not going to produce the perfect market, and it won't produce perfect credits. If we want to address issues such as quality, which is sort of a reckoning that the voluntary carbon market is facing, this can only be done through effective implementation. That means domestic frameworks, domestic regulation, but also market infrastructure as well. And ratings is an important part of that. We can discuss that a little bit later. In terms of mobilizing private capital, we do think there are important changes that needs to be made. This relates to issues such as confidentiality as discussed, but also issues such as clarifying the process for how a credit is authorized and enters the market. There's many other points we could pull out, and maybe we can tease out some of them in the discussion, but I'll leave it at that, Seb.
Fantastic, thanks, Finn. So look, clearly, lots to get excited about. There's been a lot going on in the 2 years since Article 6 was agreed, but lots of outstanding questions still heading into COP this year. Obviously, it's great to see market mechanisms introduced at the kind of Paris Agreement and UN level, and we're obviously huge advocates of that. But there is a market that exists for carbon at the moment outside of compliance markets, and that's the VCM, one that we're obviously very active in. So Teresa, I'm keen to hear your thoughts on what all of this means for the VCM today.
Yeah, thanks. And great to see so many familiar names in the participant list. Great to be here with you. So yeah, there's a market for carbon at the moment. There's actually many markets for carbon at the moment, right? Like there's the voluntary market, there are compliance markets. So if we look at Article 6 and like both mechanisms, or there's actually also a third mechanism in Article 6, but if we look at what that means for carbon markets today, I think the short answer is probably that we don't know. Right, as in like there's 190 plus countries who are going to implement, could possibly use these mechanisms, right? And like it is going to look different country to country, right? So like in the first instance, what we're actually seeing is a further fragmentation, right? Like the rules are varied depending on the country and what they're implementing and the standards that they're setting. So I think at the moment what we're seeing is confusion. It doesn't have to stay that way though, right? So like I think there's good news all around. And I think the first piece of good news is for project developers, right? As in like potentially the projects that produce credits today for the voluntary carbon market could just find new markets here and sell them off under new mechanisms, under 6.2 or 6.4 mechanisms, as and when they comply with the relevant quality standards, right? So that's good news for project developers, which is generally good news for climate action, right? Because these are really climate projects on the ground that are creating an impact. Second piece of good news is like we're not reinventing the wheel everywhere, right? So like what we are seeing is that countries are actually looking to existing standards, existing methodologies, but also quality thresholds like the CCPs, the core carbon principles, to try and design and define what quality looks like in their national schemes based on what we already know and what we've already learned, right, from the voluntary carbon market. So that's great news because it means that there will be some of the learnings carried forward, but also that projects possibly already comply in many places. And then I guess the last piece of good news is that this might actually help build confidence, right? So like we've seen a huge trust issue across the voluntary carbon market, fueled by the media debate that we're seeing at the moment around the legitimacy of credits and the use of credits and the legitimacy of projects. So there's also a hope that if we start seeing countries regulating quality more and more for their 6.2 transactions, and if we start seeing clear guidance come out of 6.4, that could actually help build confidence in the market, right? And hopefully help unlock demand as we have that permeability of like the voluntary carbon market picking up some of the standards under Article 6, but also the other way around, Article 6 learning from voluntary standards.
Yeah, absolutely. And so I'm going to skip the order slightly, but because you picked up on obviously the CCPs and you know, all the work that's been done there, you know, which has largely been done through the lens of the voluntary carbon market. But you know, there's, as you say, a lot of application to what's going on with Article 6, but also, you know, the other way around in terms of how CCPs think about what's going on with Article 6 and the guidance that they're giving. It's obviously something that you've been extremely close to, you know, prior to joining us. So, you know, it'd be good for you to talk through that, yeah, both sides of the relationship in terms of how CCPs are influencing Article 6 and vice versa.
I think that's the million-dollar question. So the CCPs are the core carbon principles, right? And they were set out, they were published earlier in the summer. They're set out by a standard setting body called the ICVCM. That's the Integrity Council for the Voluntary Carbon Market. And they really set out to create a quality threshold for the voluntary carbon market, right? As in, like, here are the 10 principles that any carbon credit should fulfill to be credible. So the principles came out, and the criteria to really assess projects, credits, methodologies came out earlier in the year. But we haven't seen the full assessment yet of the ICVCM, right? So like at the moment, the ICVCM is going through a process of approving standard setting bodies and their methodologies, right? And like the CCP label will only be applied to credits that were issued by an approved standard under an approved methodology. So long story short is like the proof is in the pudding, right? Like we need to wait and see what actually gets through the ICVCM assessment, because I think, as with many guidelines that we've seen come out and many methodologies that we use in the VCM, there's room for interpretation within the criteria, right? Like they are designed to allow a number of different implementation models that we might be seeing. So what will be super key for us to understand where 6.4 and ICVCM might differ is to actually see the outcome of the ICVCM assessment. But we do know that, you know, both parties are speaking, they're observing each other closely, they're trying to stay in touch. So I'm hoping it won't diverge too far, because that might create further confusion. But we just don't know, right? Like they're separate processes, and I think we need to treat them as such.
Yeah, absolutely. And yeah, it's interesting that obviously, yeah, as Finn was highlighting at the start, you know, Article 6 is potentially a very powerful, you know, mechanism for seeing the Paris Agreement implemented. You do have, you know, case in the past of carbon markets having worked, but there's a lot of work going into how we think about, I guess, the new era of carbon markets at, you know, a country level. But you know, there are many who hold up, you know, what's going on with Article 6 as a reason why the VCM as it is today, you know, that it won't be around, that it's the end of the VCM. So what do you think to that?
I don't think so. I mean, call me crazy, but so the VCM is a voluntary market, and it's always been led by voluntary actors, right? Like companies that are going above and beyond what they're legally required to do. And project developers that simply set out on like a really hard and tough journey to develop climate projects that create real impact on the ground, and certainly not a career where you make a ton of money. So you know, in my mind, like we will always see companies that want to, I hope so, we will always see companies that want to go above and beyond what they're legally mandated to do. And I think those companies will continue to act in the voluntary carbon market and go beyond. I hope that we continue to see corporate engagement, right? Because at the moment, looking at the global stock tank, you know, we're not hitting 2 degrees with government action, right? So we actually, if anything, need the voluntary carbon market more than ever to help us achieve efficient emission reductions, right, and to really funnel finance into emission reductions around the globe. But it's also really interesting, right, because there's this ongoing debate, like really under the umbrella of Article 6, there's this ongoing debate over whether credits that are traded in the voluntary carbon market, right? So from a private actor to a private actor require corresponding adjustments, right? And that's been a really live debate, especially last year. That was a really live debate at COP27. And I think, you know, just looking at this from the outside in, like logically speaking, like if you have a project within the bounds of a country that is generating emission reductions and we don't apply a corresponding adjustment, it actually helps that host country achieve their NDCs, achieve their climate targets, right? So like in a way, it's in the interest of host countries to keep voluntary carbon market projects going within their territories because it helps them achieve a climate target that they've committed to publicly on the international stage.
Yeah, absolutely. And obviously a number of these countries have specifically earmarked parts of their NDC as conditional on international finance. So the VCM should, you know, be a good mechanism for that to happen. So look, we've got half an hour in, and we haven't spoken about ratings yet, which you know, for us as a business doesn't feel right. So you know, moving on to the role of ratings in the development of Article 6 markets, you know, I guess the key question is how are ratings applicable? How are we thinking about that progression?
I mean, I think the role for ratings in an Article 6 world, but I would also say in compliance schemes out there, is the exact same role that ratings play in the voluntary carbon market, right? So what we see is basically that the standards that are being set and the methodologies that are being developed can be interpreted in many ways, and that's actually really important, right? That's not a bad thing. That just means that the developer can adjust to the local context, economically, policy-wise, and ecosystem-wise or technology-wise, to implement their projects. But what that leads to is this like divergence in quality of projects that develop credits under certain methodologies, right? And like whether this is now going to happen in a country setting or in a voluntary carbon market setting doesn't really matter, because I think what we're going to see is still this like divergence of projects that happen under the same standard that have different risk profiles and different impacts that they're actually generating on the ground. So for that, like the only way to assess what's actually happening on the ground is to go project by project, right? And look year by year, vintage by vintage, what rules did that project apply and how did they generate their credits, and what can we say about their carbon accounting, their permanence, their additionality in that specific use case, right? So like I think that the role of ratings is the same. It doesn't matter which market we're moving in. I think we still need ratings to really get to that like granular detail, and we need the granular detail to scale the market, right? So the idea is really like if we can provide buyers, and whether the buyer is a country or the buyer is a company almost doesn't matter in this instance, if we can provide buyers with the confidence that they fully understand what they're investing their money into, we're much likely to unlock these markets and to unlock finance. Right. And I think the rule, well, the role of ratings agencies here is really to provide that independent opinion from a third party.
Yeah, absolutely. So much the same as we interact with the accreditors at the moment, and indeed the CCPs. Yeah, project level assessment is crucial, and obviously we're doing this at the moment, right? With our ex-ante rating, we're rating projects that are in the pipeline that may well be, you know, viable or eligible for future Article 6 markets, but we're assessing them today based on the same model that we assess any carbon project through. So yeah, very, very exciting, obviously, to see these progress from our perspective. Finn, I'm keen to bring you back in because obviously lots of people on this call will be on the ground at COP and desperately trying to mix between doing meetings and keeping an eye on their phone as to what's going on in the negotiations. So you know, key question: what are the key bits that we should be looking out for across a couple of weeks?
Yeah, it's a good question. And from experience, it can be quite difficult to figure out what's going on, even when you're over there. In fact, maybe even more difficult. I think the first thing to say is that the supervisory body, the administrative committee that has been set up to progress a lot of the debates throughout the year, has done a huge amount of work. And they've made a bunch of recommendations on technical topics. Some of those are with respect to baselines, oversight of baselines. The UN supervision will have, excuse me, rules around the sort of types of methodologies that would be accepted, oversight, etc. But this does need political approval, and some decisions have previously been sent back. I think we need to get a move on. Progress has been made, maybe not enough, and some issues aren't clear enough, but we do need politicians to agree in advance the work that they've been doing and to endorse another package of work for them. So that would be the first thing I would say. Second of all, I think it's important to look out for individual country approaches. It's not just about what is happening at the negotiations. Many countries use COP as a platform to announce their frameworks for Article 6 cooperation, so specific agreements, but also how they're planning to fund and structure purchasing agreements, whether they're linking it to other domestic regulation, etc. I think there's a number of countries to watch out for in that respect. And then finally, one thing I think is very important to the overall success of Article 6, Seb, we've been doing some research at the moment on the clean development mechanism, interviewing different practitioners who are involved in that. One of the things that everyone is united on is that there was not enough demand, or there wasn't enough diversity of demand for credits under the clean development mechanism specifically. The UK, the EU, the US all support Article 6, even were involved in the design of Article 6, but none of them have yet committed to purchasing credits under Article 6. So I think this is another thing to watch out for, which is whether buy-side countries are going to step up and commit to purchasing credits under the framework.
Yeah, absolutely. You need demand for a market to work, right? And yeah, it's a shame that a number of countries, you say, that were designing it haven't shown that yet. But yeah, let's see. So I guess just focusing in on 6.4, because there is a lot of attention on the methodologies that will come out from that, as is usually the case. The UN has put a lot of work into trying to reach the deadline at the very last minute to get some of the groundwork done heading into COP. But even if we get all of that agreed upon, that doesn't mean it's going to become operational, right? We've seen that with 6.2, and to Teresa's point about project developers today, wondering if their project is going to be eligible for these future methodologies. Like it does really matter for investment, right? So how, I mean, any guidance on timing or some of the key elements to look out for in determining when that's likely to happen based on what's going on at COP?
Yeah, it's a big question, and it's one we received in advance of this webinar as well. I think there's some key design decisions that still need to be made. So for instance, around some of the detail of authorization, for instance, around some of the technical details about what assessments are made on baselines and other issues through the 6.4 process. And those decisions need to be taken before the operationalization stage of it. Is that you need to build the market infrastructure, right? Which is not simple to do, requires resources, requires time to do it. And you need to know the design principles before you have done that. So I would say we still need some decisions from the politicians, number one. Hopefully we'll make progress at this COP, building on the work of the supervisory body. But second, you will need market infrastructure, and that will take time. And third, then you need the projects in the pipeline. So we're already seeing a big influx in investment in the pipeline, which is great. We know that some of that is responding to the Article 6 signals, and some of those projects are going to try and find the Article 6 market. But ultimately, to reach the scale we need some of the key decisions to be made, the process to be clear, and that in turn will stimulate more demand in the market. So, I mean, to give you a more specific answer, I think 2025, I would say at the earliest, maybe financial year 2025, 26. for credits to be actively traded at any sort of value in this market. However, you mentioned Article 6.2. There's a lot happening there already. A number of countries such as Switzerland, Singapore have already struck MOUs. We know that projects are being developed in those contexts. Some of them are even about to issue monitoring reports or have done so. So really, there's very little else that needs to happen except for the authorization process itself for those credits to be out there, to be on the market, to be traded between different countries. I know a few countries were aiming to announce an ITMO transaction at this COP. I'm not sure if it's going to happen, but I certainly expect in the coming months to see the first ITMOs issued under Article 6.2.
Yeah, which will be very exciting to see, and obviously the structure and information provided. So we've actually had an interesting question on 6.2 here in thinking about how we standardize transactions through 6.2. So it says we've got the VCMI and ICVCM for the voluntary carbon market. Obviously, the UN is busy working on 6.4. Who's driving the equivalent in 6.2, and is that a role for ratings to play actually in looking to bring the standardization in 6.2? Fantastic question, obviously. So Teresa, do you want to take that one first, and then Finn can chip in afterwards?
Yeah, I would love that. Yeah, let's go and rate everything. I mean, we would love that, right? Like, I truly honestly think that there shouldn't be a carbon credit out there without a rating attached to it. I'm not entirely sure we're there, right? So like, and I think it's a great question on like, how do we achieve greater standardization under 6.2? At the moment, we have a few pioneers, and like you saw numbers up on the slides earlier, right? Like Singapore and Switzerland, who are really early movers and who are trying to, pilot design 6.2 agreements with high integrity, high quality, right? So like, I think at the moment, it's really a matter of looking to pioneering countries that will drive the integrity in 6.2 transactions. And then we can only hope that there's enough international collaboration, diplomacy behind closed doors to like create a wave that will copy that, right? But I think at the moment, we're relying a little bit on international collaboration. Although I'd love to go and rate all of those ITMOs. But yeah, I don't know. Finn, do you have a different view?
Oh, I broadly align with that view. I would say it's almost, the victors take the spoils. I would say that some of the first transactions may help to set norms in this market. And in fact, you're seeing with, for instance, Switzerland, who has set interesting specific requirements around FNRB levels. So some of the baselines that are used for the type of project that they're developing, which are more conservative than are actually specified under methodologies, they're setting this high bar. So there'll be a question on every project that follows it. Are they using the same bar? So I do think these initial transactions have an important part to play in setting norms and establishing the standards that and I think it was who said the question. But I think there will still be a divergence of standards. And I'm sure we would expect to see countries drawing on existing standards that are out there, whether they're old methodologies under CDM, or indeed some of the methodologies by the private market providers such as Vera and others.
So it's also another reason, Finn, that we're wary about the confidentiality clause, right? Because we need the information there to be able to rate these credits. And so one of the things that you've been flagging is what's the extent of that clause, right?
Exactly. I think standardization is going to be very important, because what's the issue that has dominated the voluntary carbon market, and indeed the clean development mechanism before that? It is the topic of additionality, over-crediting, all of which are features of trust. And, I think our view in-house is very much, we want these markets to work, but without sufficient information disclosure as a basic ingredients, which is sort of can be capitalized on by ratings, by indeed regulation, we're not going to see those markets standardize and scale effectively.
Yeah. So there's been a question about the scrutiny on ESG ratings and whether we expect similar scrutiny on carbon credit ratings. We very much welcome that. As you'll see on our fantastic new website, which I recommend everyone to check out, public, both overarching methodologies and increasingly, all of our subsector methodologies. We're the only rating agency that publish our rating, and so we very much have taken a kind of public markets approach to how we're thinking about the role of ratings in this market. And so, yes, whether carbon credit ratings will fall under the ongoing questions around ESG ratings or not, we're kind of agnostic to, because we see regulation playing a bigger role in this market, and therefore we expect ratings to fall under regulation at some point, and we think that would be helpful for the market. So very much welcome that. And then there was a question around claims, which is obviously a hot topic. It was one of the big things discussed at COP last year around was it mitigation contributions, or I think was the terminology they came to an agreement on. But how it's a question around the interaction between Article 6 and the existing market if you are using correspondingly adjusted credits, or if you're subsequently transacting in a 6.4 market. Does this impact should voluntary buyers care, for one, is one of the questions, but also then how does this impact how people should make certain claims? And this obviously comes off the back of the VCMI's updated guidance today as well. So, Teresa, do you want to any views on how it impacts claims in the market?
Yeah, let me take a stab. This was sort of like the one line of text last year that came out of COP27, right? That was like the most debated. Like, what is a mitigation contribution emission reduction, right? Like, what is a certificate for that, and what does that mean for claims? So basically, like, this affects transactions in the voluntary carbon market where both supplier and buyer are private entities, and there is no corresponding adjustment applied. Right, and those are then called a mitigation contribution unit. The idea is basically that the credit may be transferred out of the country without that country making an adjustment to their inventory, right? It still counts towards their climate goal. And then there were a lot of questions raised around what that means for private sector buyers who are retiring those credits, right? And like, can they still make a compensation claim? Can they still call themselves carbon neutral? Or should the claim now be a mitigation contribution, right? So like a private sector company would then say that we are contributing to the host country's achievement of their NDC. It's been a little quieter, I think, around that discussion. I've heard less about it in recent months, I have to say. I'm almost tempted to say, and like, to discuss it with me if you want to, I'm tempted to say it doesn't matter, right? And like, of course, it matters what companies claim. Of course, it matters what kind of credits they buy. But what matters is that they buy high quality credits and that they compensate for their emissions so that we stop contributing to atmospheric carbon stocks. If this company then chooses to say that they're in transition to net zero, that they've compensated for their emission, that they're making a mitigation contribution, and like, I do hope that we get really, really clear guidance around that, right? And I think the guidance needs to either come from countries, right? As in, like, in France, we've already seen claims being regulated, or it needs to come from voluntary bodies like the VCMI. But I think what we should be paying attention to is that, companies who buy credits also decarbonize faster. We should be encouraging them to buy credits, and then we should be encouraging them to buy the right high quality credits, right? And then, like, yes, we need to regulate claims. Yes, it's super important. But I don't think that we've gotten to the bottom of that debate, right? So like, it's still very much hot and ongoing.
Yeah. And if I could come in, I mean, I fully agree with all of that. I mean, I always simplify it in my head to two issues when it comes to claims. One is, can the bad be balanced with good? So can your pollution of carbon emissions be balanced with purchasing carbon credits, which is one issue. And the second is, is what you're purchasing actually high integrity? That point that Teresa was making just a moment ago. Both of these are important issues, but they're also separate issues. And as you know, Seb, this topic of whether you're actually purchasing something of high integrity is something we've thought about a lot in BeZero, and we're trying to apply our ratings approach to this topic through discounting. And there's lots of more information we can share on that topic. But I think we're trying to support organizations and companies who are trying to make credible claims by giving them more information about the credits that they're purchasing. And if those credits, while they are reducing emissions, if they're not reducing as much emissions as they claim, or it's unlikely that they're doing so, that they can over-purchase using our discounting framework.
Yeah, absolutely. But yeah, I think given the market, given the year that we've just had, Teresa's point is the key one of, as long as they're doing something and the aim is towards high quality credits, then that is a good thing, and we shouldn't let complexity get in the way of incentivizing people to do something in this market. So we've got one final question on whether there's any indication of whether Red Plus will be included in 6.4. Ben, I don't know, is that something you kept an eye on recently?
Sure. So Red Plus, I think in this context, refers to the original UN mechanism to monitor, measure, and ultimately provide financial compensation for countries that introduced frameworks to reduce emissions in forestry and other nature-based areas. Subsequently, that term was used by the voluntary carbon market for specific methodology. So there is some ambiguity as to around that term, but there's been an active debate as to whether specific types of credits, including credits that were originally designed for the Red Plus UN mechanism, whether they can be eligible into the market. We in BeZero don't have a view on which credits are eligible for the market, provided it meets specific criteria such as information disclosure, additionality tests. We believe it can be rated. That's what we add to the market. But yes, the market actively debates this. What I do know is that there's strong objections to including those credits within the Article 6.4 mechanism, such that I think it would be unlikely that they would be included in it. But it's not an issue that there is a definitive answer for at this stage.
Excellent. So, well, look, this has been a fantastic discussion. I certainly enjoyed it, and I hope everyone else who's dialed in has enjoyed it as well. As I said, we will all be on the ground at COP, along with Tommy, our CEO. We're there from the 2nd to the 10th. So if you are there and want to have a chat, please do reach out. We'll also be obviously keeping an eye on everything that's going on with the negotiations and publishing kind of reaction pieces and stuff on the platform as and when we think that is useful. So yeah, thank you everyone for dialing in today. And yeah, if there's any follow-up questions, please do feel free to reach out to the team. But yeah, look forward to seeing people at COP and there afterwards. And thank you to my wonderful contributors, Teresa and Finn. Have a great day, people. Cheers.